Good afternoon and welcome to Market Closing on our brand new collaboration between Business Today and India Today Television. It's been a day packed with action on Dalal Street, from global market cues and policy signals to earnings, sector trends and stock-specific moves. We are here to bring you the full picture of how the markets performed and what it means for your money. So stay tuned as we break down the Sensex, the Nifty and the stories shaping tomorrow's trade as well. And don't miss the market opening show tomorrow morning at 9 a.m. with Abha Bakaya, giving you the first word on everything that will move the markets. Let's first take a look at what is the hot news as far as the corporate and the financial space is concerned. After a GST fuel rally, markets cool off from the day's high point. Nifty trades around 24,800 bucks. So we're also looking at gains over 60 points. Sensex is up by 300 points. Nearly 80,900 odd points can actually be seen on the Sensex as well, while the Nifty Bank holds near a 100-point rally. Prime Minister Modi's Diwali gift comes in the form of a GST overhaul. Finance Minister Nirmala Sitharaman's reforms are expected to boost consumption and carry a revenue impact of 48,000 crore rupees. Life and health insurance premiums are exempt from GST from September 22nd, but CBIC confirms no input tax credit on inversion benefits for the industry. HDFC Life and SBI Life shares trade lower. Nifty Auto Index is in top gear with Mahindra & Mahindra, TVS Motors, Eicher Motors also all hitting record high levels in today's trading session. Popular cars like Maruti Alto, K10, Swift, Desire, Tata Tiago are set to get cheaper. FMCG stocks including Imami, Colgate, Britannia also trade higher. The GST Council has imposed a 40% levy on casinos and gaming. Gaming stocks like Delta Corp and Nazara Technologies fell by up to 7% in trade today, while tobacco stocks including ITC and Godfrey Phillips inch higher. Let's straight away start talking about the markets in the last 20 minutes of trade. If you look at the Nifty, we have slipped to the low end of the day right now, 24,732. So we are just about flat with a positive bias, at least for now. We've given up the morning cheer as far as the GST fueling sentiments was concerned. Look at the sectors that are still holding up. Those are all the sectors that are benefiting from the GST rate cuts. Auto space, that's the highest moving sector today, 0.8% of a rally on this one. Look at financial services sector, that's buoyed by a lot of names like Bajaj Finserv and Bajaj Finance, about half odd percent higher for that one. The fast moving consumer goods sector is also up by about 0.2%. Consumer durables and banks, those are the sectors that are holding up. But PSU banks, oil and gas, IT, these are the sectors that have now slipped into the trade. Let's talk about the top movers as far as the Nifty stocks are concerned. Mahindra & Mahindra, the top mover today, almost 6% of an uptick can actually be seen on this one. The NBFC, the non-banking finance companies, Bajaj Finance, Bajaj Finserv are also cheering that more and more people will be going for financing of consumer durables and autos in this festive season. Look at Apollo Hospitals also and Nestle from the FMCG stocks. These are the top moving stocks as far as the Nifty is concerned. On the downside, however, you do see some stocks like Tata Consumer Products, HDFC Life, Wipro from the IT pack, Maruti Suzuki that's now slipping, and IndusInd Bank also among the top drags, at least for now. Let me now quickly welcome our guest on board. Mr. Vineet Bulinchkar is with us. He's the head of research at Ventura Securities. Warm welcome to you, Vineet. Thank you so much for taking the time out on India Today. Just want to begin by understanding from you, the markets have slipped to the day's low point. Do you think a lot of this good news about GST rate cuts, which was also already getting penciled in the run-up to the announcements, has already now priced in? Or do you think there could be some more upside from here too?
So, we have always seen that when big ticket reforms are carried out over a period of time and the expectation when they fruition, the markets tend to give up the gains where the traders book profits. However, we believe that, over the medium term, as, when these tariffs kick in, I think it will be a very, very splendid time to buy these stocks.
Right. So Vineet, help us understand, if you have to just break it down for all our viewers, the top 2 or 3 sectors that you believe are going to be definitely benefiting through the festive season coming forward over the next 2 to 3 months.
I think the auto space, because it already had got wings from the fact that, the interest rate cuts were already taken. However, you know what? I think the event will be slightly prolonged because people will now defer their purchases until the Shraddh gets over, and actually when Navratri hits and these GST reforms take place. So I believe
Okay.
that the AC space, consumer durables, autos, and insurance sectors are going to be the top picks. Bajaj Finance is one of the biggest beneficiaries of this consumer boom.
Why do you think Bajaj Finance is one of the biggest beneficiaries out of all the NBFCs and the banking space stocks?
So they are completely tilted towards consumer finance, and they have a lion's share in the consumer finance space. So obviously they will benefit from that, and they have got multiple. They finance multiple non-traditional avenues where people want to take loans.
Okay. What about the cement pack? And do you also feel this reduction of GST from 28% to 18% will also spur growth in a lot of construction areas, real estate? Does that also come into a favorable zone now?
Absolutely, cement is an integral part of real estate construction, and it will lower the price of construction. Number one. Number two is the fact that it makes real estate affordable, and we will see that being passed on to the consumers by the builders, because currently, the sector is going through a slightly lean phase.
Absolutely. There is also this entire benefit that a lot of our viewers are really looking to understand is by way of complete exemption from GST on life and health insurance. Remember, viewers, on whether GST exemption will actually make health insurance premiums more affordable and whether industries will really need to hike premiums to cover the costs. We asked Dr. Tapan Singhal, the MD and the CEO of Bajaj Alliance General Insurance, in an exclusive chat with me earlier that he said a straight up 18% drop in premiums will definitely benefit policyholders. Let's listen in to what he had to say.
An immediate drop of 18%, no? Because that is where the GST drop would happen, it becomes zero. So that would happen. Now, in the existing policy, also the good part of general insurance is that it's mostly an annual contract, no? Which means it comes up again for renewal every year. Some policies are for 3 years, but most of the policies are for every year. When they come up for renewal, again, if there's a 0% GST regime, so they get the benefit of that immediately. Now, for the past policy, the issue is that the GST has already been paid for, no? So that would not have any kind of refund. So the issue is for 22nd, policies purchased would have an 18% benefit straight off because of the GST becoming zero. Second, all renewals coming up will have that benefit, no, going forward. So I can commit for my company, not at all. For the industry, also the leaders I've spoken to, they also have committed that no, there will not be a premium hike happening.
All right, so 2 clear points that Dr. Tapan Singhal has clearly mentioned. One, a straight up 18% benefit will come down. So therefore, your policy premiums will go down by 18% for both life and health because they were taxed earlier at 18%. Now they will be taxed at 0. There's a complete exemption. So definitely the premiums will be more affordable from now. I did ask him also about whether the insurers will need to hike any premiums to cover some of the costs, which they end up losing because of the loss of input tax credit. And he said that at least for now, there is no premium hike on the cards. And even on the industry level, he agreed to say the same as well. Now, when we look at some of the viewers' questions that are actually coming in because of these insurance GST rate cuts and exemptions completely. We'll take one question with Vineet there. Vineet, our viewer question is with respect to why are insurance stocks falling despite the GST relief? This is from Ratan Singh from Jaipur, who actually says that is it the right time to invest in insurance stocks after the recent dip has come in? How would you advise?
I think insurance is the biggest, the GST cut, which is being brought down to 0, is the biggest influencer. I think that, for the same amount of premium, including GST, you get a higher cover. And, people are comfortable with that. Those who are finding the GST very, pinching the pocket, for them, it will be a slew of relief. And obviously, the penetration of insurance is very less. More and more people will now seek to have insurance cover both in real, life as well as in general insurance. And you have to understand when you pay premiums, then you're paying premiums every year. So what happens now is that the growth that will come in the insurance sector, that will make a higher base, and there will be a one-off jump in the premium that the insurance companies collect, and that will also boost immediate valuation. So although they are falling, it is a good time to buy into them.
Okay, wonderful. You also mentioned about the auto space and, for all our viewers to also understand, Vineet, after the big GST reforms that have been announced, the auto sector is definitely hailing the decision. It's the top performing sector today. In fact, Business Today also spoke exclusively with Mr. R.C. Bhargava, the chairman of Maruti Suzuki, and also Santosh Iyer, who's the MD and the CEO of Mercedes-Benz India, to really take their views as to what these changes really mean for the industry at large. Let's listen in to those insights too.
I see the GST reform impacting the total economy. I see economic growth going up. I see all the sectors of the economy growing up. And the car sector is dependent on its growth, on the growth of the rest of the economy. When the economy does well, the car sector does well, and vice versa.
On the festive season, we already had a pent-up demand in August. So if you see, August was 10% lower than a normal August that we see. So clearly, all of these customers were there. They are waiting for the new GST rate announcement, which has now happened. So surely, all of these customers will jump in now and buy. So that's get added to the normal festive demand.
All right, so those are the industry statements that are coming in after GST rationalization has come in as well. We also have one more question that we picked up from our viewers as far as the auto space is concerned. Riya Swami from Jalandhar asks, and Vineet, I'd toss this question to you. How can I benefit from GST rate cuts if I've already booked a car on September 1? Well, that's a tricky one. Well, Vineet, a lot of viewers had also been deferring their purchases because they did know that, some sort of a decision on GST could come in. Only yesterday we've come to know, last night, that September 22nd is when the new GST rates or next-gen reforms will come into effect. So all of those people who've already booked their cars on the previous rates, is it possible for you to advise? Is it possible to probably switch or maybe, do a booking at a later date, adjust the prices? How should they go forward?
Yeah, I think you should go ahead and talk to your dealer and tell him that, can you roll over my purchase? I think they would be more than happy to help you with that. And just in case it's not working out, if your amount paid is abysmal, then, you might as well cancel a booking and do a new one after the short period is over and the GST's reforms kick in.
Absolutely. I think even for small cars and for two-wheelers, the benefits could be much more. There are several of brokerage houses that have also penciled in an 8 to 10% price drop, at least for the small cars and also for the two-wheelers at large there. Vineet, would you be able to help us understand top choices from the auto sector that you may have because of these GST rate cuts? Which are the stocks that are going to be benefiting the most and the companies that are going to be benefiting the most as well? Say for an M&M, it's held on to the top spot throughout the session today. Is that also because they have a lot of large, fleet of tractors, they have a fleet of luxury cars, they also have small cars. So how are you looking at the benefit, in terms of order of preference?
Yeah, so M&M is known for large SUVs, right? And there was a contention in the market that, the cars over 4 meters will be charged a higher rate of taxation. And that has actually not come through. And so that is very, very promising for Mahindra. And currently, Mahindra has a slew of new models that they're launching. The EV is very well fancied. And we believe that Mahindra is going to be one of the top beneficiaries in the, four-wheeler space. Apart from Mahindra, we also like Maruti. We think Hero Honda is a great stock because it has got, it's got its strategy right in place. And it is making new models in the higher CC segment rather than the entry level. And Ola and Ather are also going to be beneficiaries because we're going to see the penetration of EV vehicles really kick in now.
Absolutely. And even the electric vehicle segment that has stayed put at 5% of GST. There was earlier some fear that, some of these EVs, which are higher priced brackets, that could move to a higher tax as well. So that hasn't come true. So EV space could also be a beneficiary at that. Let's talk about consumer durables now. One of the biggest beneficiaries of the GST rate cut is going to be the consumer durables sector. All of those white goods that you use, your air conditioners, your refrigerators for that matter, all your appliances that are usually seen in white color, those are called as consumer durables, especially television sets, ACs. So we spoke to Sunil Vachani, he's the founder and chairman of Dixon Technologies, on finding out what the reforms really mean for the industry and what's the kind of demand that they're looking at. Let's listen into what he had to say.
Yeah, I think these reforms are path-breaking, to say the least. And they're going to have a huge positive impact on the industry. With the GST coming down from 28% to 18%, these products will become more affordable. And I think there'll be a huge trigger in terms of increasing consumption and sales of these products. Once that happens, you would see that India emerges as a base for manufacturing not only for the domestic market, but for global markets.
Right. We also have a question again from one of our viewers. Vineet, I'm tossing this question again to you. This is Jaya Tyagi from Agra. Writes in, is the sharp fall in sin goods, beverages and gaming stocks also an investment opportunity for me? So that's another interesting question that's actually come in. Remember, apart from the 5% and 18% GST slab rate, an additional 40% slab has also been introduced for the sin goods, your tobaccos, pan masala, gaming, lottery, all of that. And of course, for the uber luxury, maybe a private yacht or private aircrafts, all of those will also attract 40% GST. And the question is coming in on that. In fact, even some aerated beverages that could be under the same ambit. In fact, from the gaming stocks today, we have actually seen a sharp dip on both Delta Corp and Nazara Tech in today's trading session as well. So let's try and understand Jaya's question from Vineet. How are you looking at these beverage stocks, gaming stocks for that matter? Some of them are attracting highest rate of 40%.
Yeah, so obviously they're going to take a little bit of a hit. And so right now may not be the time to get into them. Even if we talk about the other sin stocks like ITC and the other cigarette stocks, there would be a little bit of a pause before you get in. But, the best way to deal with this is to see how the volumes are impacted in the, December numbers. So if the December numbers, which are released in Jan, if they are good enough and, they have kept pace and not lost too much, or the price hikes have been taken, because typically when GST goes up, companies cannot take price hikes because it damages their volumes. So, it's very good to let some time go by, and of course, December results is when you should look to buy into them.
Okay. We also have seen government officials coming out and cheering for the decisions that have been made by the GST Council. We had Commerce Minister Mr. Piyush Goyal, who has hailed the GST reforms as a historic move. Speaking on the government's landmark tax overhaul, he called it the biggest reform that India has seen since independence, fulfilling the Diwali Bonanza promise announced by Prime Minister Narendra Modi on 15th of August. Let's listen into what he had to say.
He had announced that there is a big Diwali Bonanza in GST, and we have yesterday seen that what we thought could be big has turned out to be the biggest ever reform that India has seen since independence.
All right. Vineet, I want to come back to you and try to understand, one of the key aspects that all of us have been talking, you've come on Business Today television so often and talked about how these GST rate cuts could somehow provide cushion to all the external uncertainties that we've been facing. Tariff that continues to stay put at 50% at least for now. There have been some indications and some hopes that are coming to us from the government side that give us a hope that at least in November we could see some sort of a deal to take place. But so far, far, both the sides, nobody's blinking and everybody's looking to protect their own guards at this point in time. I want to know from you, how much of an impact can, GST rationalization really help us to brave, at least at this point in time, or cushion the impact for us?
So, if you see our overall sales are about, in merchandise sales to US are about $80 billion and about $45 billion of that is impacting. So, if you multiply by a roundabout 90 number, okay, you will understand that it is around 3.5 lakh crores. So that's quite a hit. Now, while we are dealing with that, the immediate way to kickstart the economy is to lower the GST rates, right? Our depreciation has also gone down, so it makes our goods competitive in other markets. And by lowering the GST rate, what happens is we are expecting that there would be a spin on our economy by about at least 1 or 2%, and that should help, more than make up for the loss from the American economy. But at the same time, the government is also working on opening up other markets, and we are talking about 100 markets. So that will take, about 5 to 6 months to really trickle down and put everything in place. Meanwhile, if the government is able to provide a face saving to the US government, then, the deal can happen a lot faster. And, I think November 15, November 20 is the time when it actually kind of kicks in, because the US needs India the most. And, this is a blessing in disguise, because suddenly our exports not only get reinstated to the US economy, but we have diversified to 100 crores, 100 other markets. And, the game changer is going to be the e-Vitara, which Maruti is launching. And that will be the flagship product which will display the brand of Made in India globally.
Fantastic. Any other sectors beyond the ones that we have just discussed, Vineet, that you are getting more bullish on, maybe fertilizers for that matter, textiles for that matter, agro-related spaces? What would you really look at?
I would look at, the renewable space, because the costs have also come down there. And renewables is one place where, the prominence of the government to, kick in green energy is there. So I think that will also benefit very well. Currently, those stocks have been lying a little bit low. So I expect them to also pick up a bit of space. The other space which are ignored are paints, With Diwali coming in, paints getting cheaper, it's going to mean that, people go and color their houses, buy furniture. And also, so building material and building products is also another space which not everyone is all talking about. So we should be focusing there also.
Okay. Help me understand an overall view on the kind of revenue loss that everybody is highlighting, at least the impact that the economy might face because of these GST rate cuts as well. Do you think it is manageable at this stage for both the exchequer, the government at this point in time, and the economy? Do you think the kind of volume surge that we will get, the kind of sales uptick that we will get is more than likely to make up for the revenue loss there?
See, I don't think that the revenue loss would be made up completely, because we are going to, in our estimates, about 1.8 lakh crores of fiscal hit that they will be taking. Apart from that, we've seen Sindhu 1 operations happen. We've also seen the government take, voluntary reductions in other places also. So what is going to happen is that we are going to have a little bit of the fiscal deficit inch up, but we've seen the fiscal glide path which has been adhered to so far. So, this is only going to be a blip for a while before we continue the fiscal deficit discipline that has been the hallmark of this government.
All right. Okay. Let me just quickly look at how the markets are now taking place. Remember, 1 minute to go before the markets shut shop for the day. It is the day when the markets have reacted to the big GST rationalization that has come about. The announcements, especially since last night, a 20-point of an uptick is what we have. So we have cooled off pretty much quite a bit from the day's high point. Remember, at one point in time, we were hovering above 24,900 odd mark. We've come down to 24,737. So a lot of good news seems to have already got digested in the markets, at least for now. When we talk about the Nifty gainers, you have M&M that's up by 6 6%. You have some banking gainers that are also coming in higher. HDFC, ICICI Bank, Bajaj Finserv, IDFC First Bank. These are the names that are definitely high. Even Apollo Hospitals, for that matter, is higher in trade. The advances are 1928 on the BSE to declines of 2417, at least for now. Remember, it's also the Sensex expiry that we actually see. So the Sensex is expiring at 80,728, about 0.2% higher in trade, at least for now. Broader markets, mid and small caps are seeing some cuts, at least at this point in time. We are seeing, however, autos, consumer durables, FMCG, financial services and the banks definitely holding the fort towards the end of the session. But IT is the one that has actually cooled off quite a bit, over 1% losses that can be seen on the IT sector. PSU banks have also come down, over 1% losses for this one. Oil and gas, real estate and even the broader markets, both the mid and the small cap sectors are also weak. Top movers on the Nifty at the closing hour, I've already marked out M&M, Bajaj Finance, Apollo Hospitals and Bajaj Finserv. But on the downside also, if you look, the insurance majors have slipped. HDFC Life, we're also looking at Tata Consumer Products, look at even names like Maruti Suzuki. They are all the stocks that are actually declining in trade. Look at even Wipro and HCL Tech from the IT pack that have actually slipped in trade today. But let me quickly look at the broadest names, names that actually shot up pretty much sharply in trade today from the Nifty 500 basket. You'll be able to see names like Atul Auto, for instance, that's also higher in trade. Look at Moschip Technologies. Those are the names that you should be looking at, which have actually shot up 15-17%. These are the top buzzers in terms of stocks. Look at Electronic Smart. You would remember that you go out to Electronic Smart to look for and compare between consumer durables and go for your shopping there, because those are the most accessible offline stores that people go to, for their consumer durables needs. Electronic Smart is one stock that has shot up by 11 to 12 odd %. Look at Gandhi Special Tubes. Look at even names like MIC Electronics. All those electronics focused companies, they are higher. Stationery names, DOMS Industries, you would be knowing when you purchase a lot of stationery items, sketch pens, pens, pencils, all of that, notebooks, a lot of globe maps, all of those have also been exempted from GST rates. Those are the kind of stocks that have actually pulled up in trade, 7.5% higher for a DOMS Industries kind of a name as well today. Look at even names like cement. Sagar Cement, for instance, is up by about 7%. Remember, 28% to 18% for the cement stocks. Those are the ones that have also picked up a lot of pace as well. So that's as far as the cement stocks are also concerned. Let me also just highlight for all our viewers when it comes to the key stocks within the mid and the small cap names. Where exactly have you found a lot of move and a lot of action in today's session? Let me just look at Colgate, Vishal Mega Mart, look at again Jubilant Food Works, PB Fintech, Aditya Birla Fashion, all of these names that picked up higher in trade. Coming to you back, Vineet, I want to understand just last one or two questions from you quickly, if you could help us understand. Beyond this, after the GST push has already come in, remember a lot of macro data is supporting the sentiments. We've had the GDP data, which was strong. We now have the GST rate cuts that have come in. We already had the RBI rate cuts coming in, and we had the, finance minister announce in the budget also the tax cuts that have come in. So many of, steps have been taken already. What will this do to the markets till the year end?
I believe that the domestic economy is going to boom big time. We've also had one very good rainfalls that he did not mention. So I think it's going to be a very strong rural economy driven growth. Urban economy is also going to pick up with that. And I think the sluggishness that we've seen in the numbers and, the fallout of the export, tariffs that are there are more than going to be compensated. So I think we will come back to the 10% normal GDP growth, which has slipped to 8.8. And that, I think, is going to be very, very strong growth going ahead.
Fantastic. Okay, Vineet, thank you so much for taking the time out and then being with us to explain to all our viewers the impact of these big bang reforms on the markets and what to expect going forward from here. Viewers, you can also send us your mutual fund queries, your asset allocation, market and commodities queries to us on the number that's flashing on your screens. And don't miss the market opening show tomorrow morning at 9 a.m. with Abha Bakaya, as it gives you the first word on everything that will move the markets. And with that, we wrap up this special edition of Business Today show. But before we go, here's a first look at what you should be expecting going forward from here in the general news.